Hello, my friends and followers, it's Alan. I'm back, and if you don't know me, I'm a 32-year-old entrepreneur based in the UK who has a portfolio of trading businesses, stock investments, and residential real estate. But today, we're going to talk all about credit, as without this, I certainly wouldn't be borrowing 7 figures from the bank. So what exactly are credit scores? They're like a financial report card that follows us through life. But what if you could change your grade in just 30 days? In this video, I'm revealing my credit score secrets that banks and lenders do not want you to know. These hacks could be your fast track to better loan terms and financial opportunities. Now, you might be wondering why credit scores matter so much. Well, they impact everything from the loans you get to the interest rates you'll pay. A good score can open doors while a bad one can slam them right shut. I know how frustrating it can be to feel stuck with a low credit score, but here's the good news. You can make significant improvements in just 30 days. That's right, 1 month from now, your financial future could look a whole lot brighter. Some of these strategies are so effective that banks and lenders prefer to keep them quiet, but I'm here to spill the beans and help you take control of your financial future. Ready to boost your score? Let's dive in. Now, the first step is easier than you might think. What if I told you that the key to unlocking a higher credit score is hidden in plain sight? It's a goldmine of information that banks hope you'll overlook, but I'm about to show you how to use this to your advantage. Let's talk about your credit report. It's like a financial snapshot that lenders use to decide if you're trustworthy with their money. But here's the thing, everyone. This snapshot might not be as accurate as you think. In fact, a 2021 Consumer Reports investigation found that 34% of consumers discovered mistakes in their credit reports. That's right, 1 in 3 people have errors that could be dragging down their scores. So how do you get your hands on this crucial information? It's simpler than you might expect. You can obtain free credit reports from Equifax, Experian, and TransUnion by visiting annualcreditreport.com. If you're in the UK, check out creditkarma.co.uk, and this is something that I use personally. This is your chance to take a deep dive into your financial history and spot any issues that might be holding you back. When you're looking at your credit report, keep an eye out for common errors. These can include incorrect personal identification details, payments marked late when they were paid on time, or even accounts that don't belong to you. It's like finding typos in your financial biography, and correcting them can make a big difference. Now, you might be thinking, okay, I found some errors, what next? This is where the magic happens. Disputing these errors can lead to a quick boost in your credit score. The credit bureaus have 30 days to investigate disputes, which means you could see improvements in just a month. To file a dispute, you'll need to gather some evidence. This could be proof of payments made or evidence of account closures. Think of it like building a case for your financial innocence. Once you have your documentation, submit it to the respective credit agencies. It's like presenting evidence in a courtroom, but instead of a judge, you're facing a credit analyst. But don't stop at just looking for errors. It's also essential to check for accurate but old information that should no longer appear on your credit reports. Negative marks can stick around for up to 7 years, but sometimes they overstay their welcome. If you spot something that should have aged off your report, it's time to wave goodbye and get it removed. Remember, checking your credit report is more than just a chore. It's a crucial first step to improving your credit score. It's like getting a health checkup for your finances. You might not always like what you see, but knowing is half the battle. By identifying factors that may be holding your score back, you're setting yourself up for success. Now that you've identified what's holding you back, let's talk about skyrocketing your score. Did you know there's a magic number that could instantly boost your creditworthiness in the eyes of lenders? It's not your income or your asset, it's a simple percentage that most people overlook. I'm talking about credit utilization, and it's one of the fastest ways to see your credit score jump. Credit utilization is the amount of credit you're using compared to your total credit limit. It's like a financial game of balance, and keeping it low can lead to big wins. The magic number you're asking? 30%. That's right, keeping your credit utilization below 30% can have a significant positive impact on your credit score. But here's where it gets even better. Top scorers often keep their utilization in the single digits. So if you want to see rapid improvements, aim for that sweet spot below 30% or even lower if you can manage it. Now, you might be thinking, that's great, but how do I actually lower my utilization? Well, I've got some fast track tactics that can help you see results quickly. One of the most effective strategies is to pay down your credit card balances before the billing cycle ends. This is a little known trick that can lead to a rapid increase in your credit score. Here's how it works. Credit card companies typically report your balance to the credit bureaus once a month, usually on your statement date. By making a payment just before this date, you can ensure that a lower balance is reported even if you've used your card throughout the month. It's like giving your credit score a mini makeover every month. But what if you can't pay your balance off in full? Don't worry, there's another tactic you can use. Try making multiple payments throughout the month. This approach can help keep your utilization low consistently rather than letting it spike between payments. Now let's talk about another powerful strategy, requesting higher credit limits. This might sound counterintuitive, but hear me out. If your credit limit increases while your balance stays the same, your utilization ratio improves automatically. It's like expanding the size of your financial playground without actually spending more. Of course, this strategy comes with a word of caution. Higher credit limits can be tempting, so it's crucial to maintain your spending discipline. Remember, the goal is to improve your credit score, not to increase your debt. For those of you who are new to credit or have a thin credit file, I've got a special tip that could give your score a significant boost. Consider becoming an authorized user on someone else's credit card account. This strategy can be particularly effective if the primary account holder has a good payment history and low utilization. When you become an authorized user, their positive credit history can be reflected on your credit report, potentially improving your score as well. It's like borrowing someone else's stellar financial reputation to give your own a boost. Just make sure you choose someone you trust who has a solid credit history. Now, I know what you're all thinking. This all sounds great, but how much of a difference can these strategies really make? Well, let me share something exciting with you. It's possible to improve your credit score by 20, 50, or even 100 points in a matter of weeks, especially if you're starting from a lower score or you're new to credit. Now that we've covered some quick wins, let's talk about building a rock-solid credit foundation. There's a financial superpower that can transform your credit score, and it's hidden in plain sight. What if I told you that mastering this one skill could be the difference between constant financial stress and peace of mind? I'm talking about the power of consistent on-time payments. It might sound simple, but this habit is the backbone of a healthy credit score. In fact, payment history makes up a whopping 35% of your credit score calculation. That's more than any other single factor. But here's the thing, everyone. Life gets busy and it's easy to forget a due date or two. That's where automation comes in. Setting up automatic payments for your bills is like putting your credit score on autopilot. It's a set it and forget it solution that can lead to significant improvements over time. Now, you might be thinking, what if I don't have the funds in my account when the automatic payment hits? And that's a valid concern. If you're worried about overdraft fees, consider setting up payment reminders instead. Most banks and credit card companies offer text or email alerts to remind you when a payment is due. This way, you're in control, but you've got a digital nudge to keep you on track. For those of you who are just starting out or just trying to rebuild your credit, I've got a powerful tool for you too: secured credit cards. These cards require a cash deposit that serves as collateral, which means they're easier to qualify for than traditional credit cards. And the best part, your on-time payments on a secure card can have a positive impact on your credit score. Here's how it works. You put down a deposit of, say, $500, and that becomes your credit limit. Then you use the card like any other credit card, making purchases and paying off the balance each month. As you consistently make on-time payments, you're building a positive payment history. It's like a credit score training wheel, helping you build good habits and improve your score at the same time. But what if you're a renter? You might feel like you're missing out on credit building opportunities that homeowners have with their mortgage payments. Well, I've got good news for you too. There are now services that allow you to report your rent payments to the credit bureaus. This means that the rent you're already paying can help boost your credit score. It's like getting extra credit for something that you're already doing. Now, let's talk about a little known strategy that can give your credit score an extra boost: Experian Boost. This free service allows you to add non-traditional payments to your credit report, like your Netflix subscription or your phone bill. By including these payments, you're showing lenders a more complete picture of your financial responsibility. It's like adding extra gold stars to your financial report card. And remember, building a solid credit foundation isn't just about seeing quick improvements. It's about setting yourself up for long-term financial success. These strategies that we discussed, consistent on-time payments, secure credit cards, rent reporting, and services like Experian Boost, are like planting seeds in your financial garden. With time and care, they'll grow into a robust credit profile that can open doors to better loan terms, lower interest rates, and more financial opportunities. You've got the basics nailed down now, but are you ready to take your credit score to the next level? There's a little known technique that credit experts use to maximize their scores. It's not complicated, but it requires a shift in how you think about your credit. I'm talking about your credit mix, and it's a powerful tool that many people overlook. When it comes to credit, variety isn't just the spice of life, it's the secret ingredient to a higher score. Lenders like to see a mix of different types of credit on your report. This includes credit cards, car loans, mortgages, and other forms of credit. Why? Because it shows you can handle different types of financial responsibilities. Here's the thing. The FICO, the company behind the most widely used credit scoring model, prefers to see consumers with both installment loans and credit cards. It's like showing lenders you're a financial jack of all trades, but don't go out and apply for every type of credit just for the sake of it. Remember, each application can result in a hard inquiry on your credit report. Now, let's talk about something that might seem counterintuitive: collections accounts. You might think that paying off a collection would instantly boost your score, but it's not that simple. Paying off a collection can remove the threat of legal action, which is great, but here's the catch. While newer scoring models might ignore paid collections, older models like FICO 8 still consider them in a negative light. So what should you do? It depends on your specific situation and what scoring model potential lenders are likely to use. In many cases, paying off collections is still a good move for your overall financial health, even if it doesn't immediately boost your score. Let's move on to another advanced tactic: managing your credit history. You've probably heard that older accounts are good for your credit score. That's true, but it's not the whole story. While keeping older accounts open can help maintain a longer credit history, there are times when closing an account might be the right move. If an old account is tempting you to overspend or contributing to high credit utilization, it might be wise to close it. The key is balance. You want to maintain a healthy credit score without putting yourself at risk of overspending. Now, here's a strategy that can really make a difference: timing your credit applications. Every time you apply for credit, it results in a hard inquiry on your credit report. Too many hard inquiries in a short period can lower your score, but here's the expert move: space out your applications over several months. This can help minimize the impact of hard inquiries on your score. In fact, experts recommend limiting hard inquiries to once every 3 months. It's like giving your credit score time to recover between workouts. This approach can help you maintain a healthy credit score while still allowing you to apply for new credit when you need it. Remember, these advanced strategies are all about maximizing your credit potential. It's not just about having good credit, it's about pushing your score into the excellent range. And that can open doors to the best financial opportunities out there. Increasing your credit scores by even just 20 points can put you into a lower interest rate category for credit cards and loans. That's the power of these advanced strategies, everyone. They can be the difference between good rate and great rate, between being approved and being approved with the best terms possible. All right, it's time to put everything into perspective that we've learned today. Here's your 30-day plan to boost your credit score. Start by checking your credit reports for errors and disputing any inaccuracies. Then focus on paying down your credit card balances to lower your utilization ratio. Aim for that magic number of 30% or less. Set up automatic payments or reminders to ensure you never miss a due date. And remember, payment history is the most important factor in your credit score. Consider becoming an authorized user on a trusted person's credit card account if you're new to credit. While you can see significant improvements in 30 days, maintaining good credit habits is crucial for long-term financial health. The sooner you start, the faster your scores will escalate. If you've enjoyed this video, please subscribe to the channel, smash a like, and let me know in the comments below that you are starting your 30-day action plan today so I can keep you accountable. And I'll see you all in the next one.